now below that 91 per dollar mark. And to understand what led to this and what's the outlook going forward, we are now joined by Mr. Anindya Banerjee, head commodity and currency at Kotak Securities. And remember, markets, although they've recovered from the lowest point of the day, that too saw a sharp knock in trade today. To understand what the market setup is looking like, we are joined by Mr. Pankaj Murarkar, CIO, Renaissance as Investment Managers. Gentlemen, thank you so much for taking your time out and joining us here on ET Now. But Mr. Banerjee, let me come to you first. Your thoughts on how much of a fall could we further see in the Indian rupee? What is leading to this, and going forward, what should we expect in the very near term?
A very good afternoon, and thank you for having me. Yes, the Indian rupee continues to slide, and it's now one of the weakest currencies after the Turkish lira. The relentless SPA outflows, now the threat about the unwinding of the yen carry trade now because of the way the Japanese bond yields have started to rise. I think that sentiment is weighing on the rupee, and we could see a further slide towards the levels of 92. It can even cross 92 over the short term and head towards 92 quarter. So at least for the next, I would say, a week or so, the pressure will be on the Indian rupee. If at all the next positive trigger that can come, it can come around the union budget.
Okay, so it can cross 92, and where rupee has extended losses against the US dollar. 91.7 is where the Indian rupee is currently trading. Mr. Murarkar, afternoon. Thank you so much for joining us today. We've recovered from the lowest point of the day, but every dip in the Indian markets clearly is being bought into. Your thoughts on what is the strategy that traders and perhaps investors should follow at this point in time?
Good afternoon. Well, I can say what investors probably should be doing. There is some bit of nervousness in the markets because of relentless FII selling, and probably we are obviously the geopolitical uncertainty has increased, so we've seen some correction or pullback in global equity markets as well. And on top of that, clearly we are very close to the budget, about 10 odd days from the budget. So market is slightly nervous going into the budget, and which is all of this combined are leading to some degree of nervousness, especially meaning what we saw yesterday afternoon and today this morning was a perfect capitulation in mid and small cap. From a longer term investor's perspective, I clearly think that undoubtedly these kind of opportunities are opportunities to step in, nibble in, and to buy, because you get to buy good companies at prices which are much more attractive than what they would have been but for this correction. So I think the overall underlying India growth story still remains very stable. India is still a 7% growth economy, and more importantly, after last year's slow earnings growth, we're getting back to a stage where we think index will do about 12% kind of earnings growth going into the next year. And valuations have normalized given underperformance of markets over the last 12 months. So I think for investors, the choice is very clear that any sign of these kind of panics or drawdowns that they see in the market, they should go and buy into good companies. For traders, I think markets are too volatile. I think traders will be better off staying away from this market for some time because the market is not showing a trend.
Okay, so the traders should stay away, but good long-term opportunity for investors. Remember, from an all-time high level of 26,373, Nifty is now corrected to about 25,200 odd levels. That's an 1,100-point downtick that we have seen in a matter of just a few sessions. But Mr. Murarkar, since you are telling us that it's a good opportunity to accumulate for the long term, from a valuation point of view, any sector that you are liking at this point in time?
So, well, we find value in banks. We think, I think banks are very finely placed. We've seen some decent numbers from the sector leaders, and probably as the rest of the earnings pan out, I think banks should be in a better position because balance sheet qualities are in great shape, and probably we are already seeing early signs of recovery in credit. So going into the next year, I think this year, banks should do well. Apart from that, I've been positive on consumption as a sector because I think given the magnitude of stimulus that has been infused into the economy last year, and I do think that the government will increase its rural spends in this budget as well. So I think there will be further infusion of stimulus into the economy, and as a consequence, consumer stocks should do well. And valuations in consumer stocks have normalized, and also the sector has underperformed for a reasonable period of time over the last 2 years. So I think consumer is another sector where we think there could be good opportunities for investors to nibble in.
Okay, so banking and consumer, these are the two sectors that you're bullish on, especially from a valuation point of view. Mr. Banerjee, coming back to you, and since we were also talking about the Indian rupee, since you're telling us that it could perhaps break past the 92 mark as well, do you expect the Reserve Bank of India to then intervene meaningfully in order to curtail the fall?
Right. The RBI is already intervening every day, but we have to understand that the trade war is still on. So when the trade war, which is happening between US and India, the currency becomes a weapon of choice, especially when the local inflation is still low. So I think the RBI is going to keep on intervening to slow down the pace of the rupee depreciation. But it's unlikely that they would put a sort of a ceiling at a particular level. And they would wait for the market forces to change their bets. And I think it could be around the budget if some positive triggers come.
Okay, so that's as far as the rupee and the recovery in the market is concerned. Mr. Banerjee and Mr. Murarkar, thank you so much for taking your time out and joining us here on ET Now.